colleagues, is Tusanang here, Machilu. It's been long since I last posted a video on trading. I think I last posted one in March the 21st. So April, May, June, July. It's 4 months to the day since I last posted something. That was way back when I was posting on, let's just go find it a bit. I haven't been that active here, so it will be easy to pick. Oh boy, yeah, it's been a while. Oh man. Yeah, it was here when I was talking about journaling my trades. This is my Twitter account, Machilu. So yeah, it's 4 months ago, but I'm back a little bit. So today, I'm looking at wavelengths, this Elliott wave analysis, and also looking at a potential trade on Adobe. Long term, I'm very bullish on Adobe, but in the short term, I'm trying to figure out how I can buy this on the cheap. If you understand the wave, the Elliott wave, I'll take this as a 0, 1, 2. Now we are potential on a 3. So I expect a 4 or a pullback of 4, maybe to this region, but not going below the 525. I've put up a trade here of just a simple vertical spread, but I'll come to it. How do I decide on my wave counts? This one needs to be the same as in there should be a grouping to the bottom on the current daily chart and the weekly chart. Then I can assume that this is a 0, my starting point. Then I start my count from there. So in this case, I started there. That was the bottom on the weekly and the daily. Then I went 1, 2, 3. How do I decide which one is 1? I need a grouping, a change in parabolic SAR flip over, and also a break below the kitchens and the blue line. Same here. A break back above. Potential it was supposed to be accurately there, but closer to grouping was here. Then on 3 there, the grouping was there, but the flip over has not happened currently. The parabolic flipped there and flipped back. For these past 2 days, it's been 2 days on the wrong side. So this can potentially continue going up, or it can go down, but I'll explain my position. I'm just explaining why I have this Elliott wave count the way it is. For me, trading is about solving problems. That's how I look at it. And when I post videos, I'm trying to solve a particular problem. It's not about showing people how good I am at picking the bottoms, picking the tops. No, essence is solving a problem. So you can see that this trends a lot. When it's going up, it trends up. When it's going down, it trends down, trends up. So how do you establish where to buy and when the trend is over, or where the trend is beginning? For me, I'll take this, I'll start with the 0. How do we know that the trend had begun? There's a flip over, price closes above the Dickinson. So 2 conditions. Price has to be above the blue line, the Dickinson, and parabolic SAR has to flip down, and my group, the stochastic should be pointing upwards, all of them. The actual RSI should be pointing upwards, so should be the same condition with the stochastic, all of them in one direction. Then I know we're going up, so I can tell the trend is going higher. Then there comes this scenario when the RSI crosses above its 70 line. That's when RSI stops acting as a trend signal. All the way from this bottom here up there, the RSI could be used as a sign for trend. We're coming, hitting there where I put the first, join the first lines, came, hit it again. But once it goes above there, RSI is no longer good enough for a trending signal. So as the ability to use it for trending, it's over. You need to use other things. Also, when the stochastic crosses above its 80 line, stochastic is now useless as a trending device. It doesn't tell you much about the trend. So these two become packed. I'll just pack them aside. They are no longer useful. As you can see, once it turned red there, you had to wait for it until it gave up its red signal, or better still, it crossed below the 70 line. Then you knew the trend was over. Same here, up she went. Once she crossed above there, as a trending signal, you give it up. It's no longer going to be reliable. It can bounce and do its funny things until it crosses below there. Here it crossed, it was a forced breakdown, then back it went. But yeah, once it crosses above that line, as a trending device, it's no longer useful. That's where you need to solve the problem. When it crosses up there, and the stochastic crosses up, what mechanism do you use to determine the trend? That's where I use parabolic SAR, these dots, and the tick and sell. When both of these are still below a price, I know the trend is still continuing. Once we have this flip over, the trend is no longer that strong. And once both of them are now below the tick and sell and parabolic SAR, we are trending downwards. Same here, when both were above, the price was above both of them, we're trending upwards until we crossed both the stochastic and RSI crossed above their upper limit. Then I relied on parabolic SAR and tick and sell, and it kept telling me to go until that point, until 3 days ago when I posted that picture that this was a shorting opportunity. It flipped back these other 2 days. But that's how I know that the trend is over. Because stochastic and RSI can deceive you. They are all still, since they crossed that day, they are all still above there. Almost flat for the stochastic. RSI is just oscillating around above that line. It's not telling you anything. So where do you pull the trigger? Mainly once both of them are now, once the price is below both of them, we know we're heading downwards. But what also I use, that's why I drew these lines when I did my posting on Twitter. When I did that posting on Twitter and they said this was a good shorting opportunity, I did post these 2 lines there. These are divergence lines. Why divergence? RSI is making lower lows when price is still making higher highs. So there is a divergence. Price is going up, RSI is going down. Once you establish that and you have a full indication of change of trend, when the price closes below tick and sell and the parabolic SAR, then it would be a confirmed short. I had it halfway there. It was not fully confirmed because the price did not close below tick and sell. So I proactively jumped in, but the correct signal will be wait for this to both close below there. So it's coming. I don't know whether it will come. If it doesn't come, then it will shoot up. Because you can see that there is a squeeze in progress. So either direction, we are going to have a major move on this. Here was the squeeze. After the squeeze, we went up. Here there was a squeeze, we went down aggressively. There was a squeeze there, we shot up. We are in the progress of making another squeeze there. We have divergence, we have parabolic SAR and the price tightly close together. I expect a major move, and because we're already at the tops here, I expect it to go down. Why did I put this Elliott wave count? To determine where I am in the Elliott wave. According to me, we're at a 3, so I expect a pullback, but it won't be a major pullback. That's my analysis. So here I was solving how to determine when the trend is over and what are the indications I need for shorting when the trend is over, and what will indicate that the trend is actually over and it's time to go in short. It's when parabolic SAR and when price closes below parabolic SAR and TKMC. I'll just show you a mini position here. I set this one up for the video. I'm looking at 560 to 565. Buying the 565, selling the 560. So if this happens, this trade as a whole would have cost me 152, 153, and expecting to make 374. So it's basically double what it cost me, what I expect to make. And this is not a major move. It's within one standard deviation of where the price is currently. Price is currently somewhere here, so I expect it to close anywhere below that within the next, this is October, so I have August, September, and October. It's a 3-month one. So within 3 months, I expect this to have moved that way. And let's go back to the chart and I'll show you where my 565 is. I'll just put the line there so it's clear. So I expect the price to come below this line within the next 3 months. So even if this is still oscillating around, I'm not rushed for time. As long as this thing closes below that one within this period, my real target, I expect it to come close to somewhere here in the 530 area or below 540 there. But I would have made what I want, doubled what the initial investment was. So this is my trade. This is what I'm looking at. I've got my divergence in progress, but I haven't had the flip over yet. But I'm looking at a trade for 3 months, so I have all the time. That was my analysis, how to determine when the trend is over and take action, and to understand that you don't use RSI for analyzing a trend once it crosses above its upper zone. I'll leave it at that, and we will come back and monitor this trend as time goes on. I thank you. It's Tusanang Mashiru.